last month and possibly the time before I hadn't, and then that had been something I was doing routinely on these. And when I think about why I was doing that routinely, we started the process of doing these monthly webinars last April. And part of it was because of COVID. So, so much changed and changed fast. And all of a sudden, instead of doing a presentation like this in person, we're doing a presentation like this virtually. Instead of meeting with you guys in person, we're meeting virtually. And if you remember back to that time, and it was March 23rd, so just a couple days ago that this occurred, we had the stock market bottom. And if y'all think back to the stock market bottom of last year, it was a scary, emotional time. And very few of us knew what was going to happen next. I mean, quite frankly, we didn't know what was going to happen with the virus. How deadly would it be? How many people get it, and so forth. And so with that, it's neat to reflect back on and think about the decisions we were making this time a year ago. So, I'm thinking about our investment principles and things like invest with a long-term view in mind. Humility, don't think you know all the answers. Diversification, you can often build wealth in an undiversified fashion, but to preserve it, you need to diversify it as a risk management tool. And all these things that really were more important in March of last year than at any other time I can think of since the Great Recession and the financial crisis. And when I look back on it, we've been spoiled over the last year. And we've been spoiled by basically markets that went straight up. And we've had this just amazing, unique year and this amazing opportunity to make money doing things by really accelerating patterns that were already happening in the economy and making them happen quicker. So things like online retail. Well, guess what? The world was moving that way. It shifted even quicker. Things like Zoom. Guess what? World was moving that way. COVID made it shift quicker. Certain healthcare and biotech things. And so by really changing up the portfolio, we've had a great experience over the past year. What I'm here to say now is get yourself ready, because this won't last forever. And we're not going to try to time the next pullback, but it would be very strange if it didn't come at some point this year. And remember, when that happens, that it's part of the process. And we're going to do the next time around the same thing we did this time around, which is hunker down and stay focused on those principles. So with that, I'm going to go ahead and open us up in prayer, and then I'll get to the presentation. So if y'all would, Lord, thank you for this time to gather together. Thank you for the friendships and clients on this call. Bless everyone's finances, bless their health, help us as a country to continue to heal and get these crises behind us, and all is well, back to some semblance of normal. In your son's name we pray, amen. All right, so there we go. You guys got to listen to me rant for a minute, and now let's go ahead and share the screen here. And if you have any questions, feel free to do it along the way, and you can type it into chat. And Juliana, will you be watching that?
Absolutely.
Or instead of logging into chat, I mean, you can just interrupt also. So what is this over here? Okay, never mind. If I had someone come in. All right, so here we go. Computer. Promise I'm better with money than I am technology, so please don't hold that against us here. All right, so what's on today's agenda? So we always focus on the three aspects of the wealth management formula, which is on these updates, investment consulting. What are we thinking about your investments right now? Then we want to remember that there's areas outside the investments we want to focus on and to be well-rounded. And so I call that advanced planning, share an idea there. Probably a very useful idea to some of you, maybe not as useful to others. And then relationship management, so managing the behavioral side and also your network of professionals. With that said, on the relationship management side, we're very excited today to have Alex Alba, who is one of the newest, although we started 3 people this month, merit employees, and I'm going to interview him and help you guys to meet him, because some of you will probably end up interacting with him at some point. All right, so the first slide here, and I thought this is interesting for basically showing how fast the world moves now. And this bottom part here is number of years. And when you think about how fast the world's moving, you know, there's two ways of analyzing investments. There's one, what should these be worth if the world stayed static, right? So if all of our variables stayed static. And then there's another, which is, hey, this is what they would look like with all of our variables, but we can also get surprised to the upside. And human ingenuity often does surprise us to the upside. And what we are finding now is through technology and better communication, the world's changing faster than ever. And we're having progress really possibly over the next 10 years that rivals what we've had over the last 100. And certainly there were some huge changes in the last 100 years that really enabled you know, things like refrigeration and the telephone, you know, flight. It really enabled us to get to where we are today. But now what we're doing on the tech side and how that's reaching so many people so fast, you could really argue that the speed's changing up. And so look, it took about 7 years for 1 million people to have a telephone after it got invented. It took about 3-ish years for the radio. When the internet came out, it took about a year or so for 1 million people to be reached. Same thing for Facebook. Interesting, these are at the same time. And then recently, this past year, only 19 days for 1 million people to get on TikTok. So there you go, as far as how things are certainly picking up. And then when we start talking about the investment landscape and what we're seeing, you're going to see this throughout our theme of this and what we're doing on a committee level right now, is really what is this path to herd immunity? And when you look at herd immunity happening, and this is by doctors' estimates, obviously we can't guarantee that any of this stuff will occur, and COVID has surprised us many times, but if you look at that starting to happen later this year, sometime in the fall, certainly going into 2022, what you're starting to do on the investment picture is see some type of kind of, let's call it the reopening trade. Whereas last year we were having the shelter in place trade. Now you're starting to see some reopening trade. And then also, I just wanted to show how big the stimulus has been compared to what was there in '08. And you got all this money now coming to out into the system. And what that is doing is actually driving up stock prices in some ways, because that's where the money's flowing to. It's flowing to assets. And then in other ways, because people are spending that money, which flows to businesses, which impacts the stock market. And one of the other things you're seeing, and this is a thesis we're at least believing in, is this idea of pent-up demand, and that you will have later this year more demand for a lot of things than you do for supply of it. And that is both, well, I'll show you for a few reasons. That's possibly driving up prices on inflation, but that's also beneficial for the economy later this year when that money is getting spent. And what you see here is U.S. personal savings as a percentage of nominal GDP. Look at that going back to 1948 and how high we are now. So people are saving money, which means they have money on the sidelines they can spend. Obviously, this isn't everybody, but this is a good number. And then where are these stimulus checks going? Well, a good bit of it has been to paying down debt. So what you're seeing now is a consumer who has discretionary funds to go out and start doing things once they get vaccinated or however, you know, or have the virus and we get towards herd immunity and the economy starts opening back up. And then on top of that, notice I said you got money chasing goods, but you can't always get the goods. So if any of you guys are building a house right now, for example, you know, or even doing an addition, you know a few things. Like one, price of lumber is very high. Why? Because it's got a limited supply right now. Second, if you need to buy an appliance, let's say it's a refrigerator or a washing machine, it takes a long time to get those now. You might have to wait 90 days for something that would normally either be in stock or be a 15 to 30 day wait. And so as long as those supplies are lacking the demand, which they are for delivery, and you see this here, which is businesses are eating into their inventories, meaning their extra storage of the goods that you buy are at an all-time low. Well, that pushes prices up, which is why we have the inflation you've been seeing, but that also creates economic activity because people have to build things in order to resupply these inventories that are already low. And so you're seeing a tick up in manufacturing, and that'll, you know, again lead to, in our belief, a tailwind throughout the next few months. Okay. All right. So that kind of leads to the overall economy and some of the thinking, maybe on the stock side, although we're going to talk about some valuations in just a little bit. So next slide is about bond yields. And I just want to talk about what happened there during the month of February. Bond yields have significantly risen over the past couple months here. And, you went from a 10-year Treasury bill at about 0.5% all the way up to, 1.75 at one point in time. And that's actually really healthy. It does a few things. First of all, if you were in a just bond index, you would have lost a good bit of money. Almost 50% of that index's value. Now, later on, it would come in with coupons paying that to cover it up. So if you held those bonds to maturity, you'd end up getting a positive return. However, if you wanted to sell them that day, which is what you see when you look at your mutual funds and ETFs, you see the mark-to-market price if those were sold that day. You'd had to do that at quite a discount because rates were going up, right? And so if I can, let's say I'm going to lend money to somebody, I'd much rather lend money, as silly as it sounds, to somebody paying me 1.5% than I would want to lend money to somebody paying me 0.5%. So there's that aspect, and why would these be going up? So there's really kind of there's three things that come to mind. There's two that I think are really valid. One, if inflation rises, interest rates should rise, right? Those two stay together. I always say to people, the real rates of return tend not to change that much over time, but nominal rates of return do. So think about, the 1970s. You might have had, 14% inflation, which sounds terrible, but you might have also been able to get 17% on a U.S. Treasury bond. So, you still had a real rate of return that was above that nominal inflation. And, those two move together. And that's one reason. The second is, if you look at all asset prices across the economy, almost all are back to where they were before COVID, and a good number are significantly above where they were during COVID. So if you see this interest rates rising and you go back to that herd immunity slide that I told you about, and you believe the world's going to look more normal 10 months from now than it does today, it only makes sense that those should start normalizing. And those are the two things that I think explain the move. A third, and I don't think this is credit related, but it could be, all right, we've been borrowing a lot of money and simply there's less appetite out there for U.S. Treasuries after you borrow all this money for all this stimulus, and so that pushes rates up. It could be that to some degree, but it doesn't appear like that would really be it because you still had a good auctions and good appetite there. But get to talk about bonds, and as you'll see, we've seen this before. There were a few times with bond sell-offs that they're even more significant than what you see now, but certainly had that trouble. And then the other big change that this has done, and this is one of the most negative slides I will show you today. So I remember telling a lot of people last year at this exact time that one of the most bullish signals you can ever see if you're a stock investor is the yield on the S&P 500 being higher than the yield on a 10-year Treasury bill. And that is exactly where we were for most of last year, certainly from March on of last year. And as you see that over here coming down, now all of a sudden the 10-year Treasury is yielding about the same as the S&P 500. And a normal environment would be that bonds actually yield higher than stocks. Otherwise, it is a huge incentive for people on needing income to get away from bonds and into stocks. And guess what? That's one reason that the market did nothing but go straight up over the past year. And then what you're also seeing here, and I just want to show the annualized return in a few sectors, and then we're going to go value versus growth. If you look at the annualized return since since February of this year, because we're just looking at very short term, and this is annualized since 2009. So if you look at these returns, notice since 2009 how well tech and consumer discretionary have done going over the past decade compared to some of these other sectors that kind of lagged. But look at this, since February of this year, those sectors have been losing, while other sectors that didn't do as well last year or previously have actually been making money. And so what you're getting is this rotation out of things that are maybe a little more expensive up here because they've earned so well over the last 10 years really towards things that were maybe a little bit cheaper. And this is part of that reopening trade that I was talking about. And it is also probably just based on pure valuations as well. And so we're really watching, is this a short-term thing that we've been experiencing since February? Or is this a more, 2 to 3 year investable thesis we need to be moving towards? And part of this also shows, look at the outperformance of growth compared to value since 2015. I mean, it's just been significant. And I'm looking over here. Where'd my mouse go? Over here. It's just been significant. Down here, these are the years value outperformed, but look at these years that growth did. And so this is great. If this continues, great. We have good exposure there, but eventually you have to say growth gets a little expensive and stuff does start rotating into some cheaper places. All right, so that's it on investment consulting. Any thoughts or questions there before I move on to our advanced planning idea for the day?
I don't see any coming in through the chat, but anybody can unmute themselves and ask a question.
I know the best way to get questions is to always show people a yield curve. So, I certainly played that one correctly. All right, well, let's go to an advanced planning idea. So we talked in January about the idea of a family brand, and then kind of a second layer on that that we're talking about this month is the idea of a family constitution. And if you think of your family like a business, which some of us may want to do, some of us may not want to do, a constitution is more like your bylaws, right? It's how do you actually run your company? What are you allowed to do at the board level? What can the C level do? What do they, defer down to management? That would be kind of the constitution side of it, right? More your internal business. A brand to me is your external business. So, Apple, for example, think of them this way. They have one way of working, collaborating, making products inside that company. They kind of have another way of marketing it to the end consumer. And those two can be very different. And I'll give you a good example of one reason why. The end consumer, they try to make that brand and that experience incredibly simple. The internal workings of these things can be incredibly complicated. And so, that's where the family constitution can come into play. And if everybody is really intelligent, doing their role correctly, getting along, this might not be needed. But when you have, and we all have at some point, some friction amongst people over money, you can relay back on these, and it can really add some value. And in fact, I really kind of think if I was, now that we came up with this concept, if I was giving one of y'all's children or grandchildren marriage counseling, I would actually really recommend that they write these together before even entering the marriage. I look back on, some of the financial maybe mistakes we made or even fights we've had, and I'm thinking, God, if we had done this type of planning on the front end, would have never had that be an issue, and that wasn't a big deal with small decisions, but boy, when you start making big decisions like what type of house to buy and what type of car to buy, these things can add value. So even wealthy families, sometimes down here, you can potentially damage a family's financial position or cause estrangement amongst family members if money gets handled wrong. And even if y'all haven't experienced this in your own life, I know we all known people who have. So what are the goals of a family constitution? Well, the first goal, detail how a family will deal with dissent. So maybe there isn't any dissent, but if there is, what are we going to do about that? Whether that's at the time of putting someone in a care facility, at the time of probating a will, where would you see this? Promote communication and saving for consensus among family members. This is good. Mom and dad have some wealth. Do they pay for the vacation or do other people pay for vacation? And then core principles, values, and long-term intent. And it's amazing when these things are written down, how much more real they come. So, here are some areas to creating an effective constitution. How can the wealth be used by family members? That makes sense. Is the goal here for the next generation to get it and they fund their retirement? Or is the goal here for them to save on their own and anything they inherit, they need to then try to pass to the next generation within reason? limitations on how the wealth can be spent, invested, and donated. Who makes the decisions and how do these decisions get made? How family members can provide input or impact the decision-making around distributions and use of the wealth, and how can family members are prepared and perpetuate family values and manage the family wealth. So this can, it can be a big deal. If some people, let's say, are more charitably minded, some people are more lifestyle minded. So 3 key sections to the family constitution. I thought these really kind of hit it home, and this is an interesting one. The first one, who is defined as family? That's a very strange thought, but it really matters. So like if let's say I'm in this generation here, and this is my son, and my son is married, let's say, to her, and these are her parents. Well, what happens if, in our definition of family, if, from their view, if their son passes away before she does, he's inherited some of their money, and she remarries? Is that new guy defined as family, or is he not? The ideal theology of the family. So what are the purposes and how they have it? And then finally, reminder of reasons to stay together. And then one thing on these is sometimes you need to bring in a third-party facilitator, and that is something we are happy to do for you. Sometimes good estate planning attorneys will think in this type of way and do a good job for you. Sometimes you just do it yourself, but every now and then you do need somebody to kind of come in from the outside, help organize this, and even kind of with an unbiased and objective lens on these things. Because there can be relationship issues, and there can even be intense family history issues. Grandmom said this money was for so-and-so, but, then they took it and did something different with it. Now they shouldn't be able to do this instead. I mean, you all know what I'm talking about. So let's just read 2 examples of these, and we'll move on to more fun with Alex, because then you get to listen to somebody else besides just myself talk. So here's an example of a well-crafted family constitution, these type of lines. We're going to memorialize the family's principles and values. So I'll give one here for my family. My parents take me and my sister on a beach vacation. Now we do it with our children and spouses every year to Ponte Vedra. And my parents literally said, all right, when you guys inherit our money, the only rule we want is y'all have to keep up that tradition. And that means a lot to our family. And we're not regretful about that at all that they said that, because we love the trip and we will keep it up. But, it's something we will do in honor of them because of their wishes and in honor of them because we're inheriting their money. Establish checks and balances amongst different interests, as well as ways to address conflicts in communication protocol. Promote accountability of family members and ensure flexibility so the family can adapt and change. Provide disenchanted family members with a viable means of exiting. So, look at the royal family. Even really successful big families sometimes have to move across the pond and figure out how to navigate this kind of stuff. So, all right. Well, with that, I'm going to bring on Alex. And Alex is really cool. He is a boatload of talent, and he is out of the University of Georgia. Reminds me a lot of myself in my 20s. And he's going to be coming on, have some clients he services himself, and sometimes working with senior advisors like myself to better service our clients and provide extra planning and just extra resources. So, Alex, why don't you introduce yourself and tell them a little bit about you, and then what drove you into this industry and makes you passionate about it.
Yeah, David. So good to meet everyone virtually. And I know David will agree with me that we hope to see you guys very soon in person. We love Zoom and it's comforting, but we'd rather see your faces in person. But yeah, like David said, I'm Alex Alba. So I have joined Marin. This is now my 4th week, which has just flown by. And I'm originally from Puerto Rico, so I come from a very unique background that really focuses on family and friends and just communities, relationships as well. And we're really kind of how I found myself here was, I realized there was a lack of education in my own community, being Puerto Rican and the Hispanic culture. A lot of people, including my family and myself, weren't very educated in this area in financial planning, wealth management, estate planning, all these great examples David had previously shared with you guys on the webinar. And I really took it upon myself to put that as my focus in college at Georgia. And so I graduated, had some previous experience at another firm, got licensed, and now David brought me along here at Merit, and I look forward to just working with everyone. And you talk about passion. My passion is people. My passion is helping people like my family, my friends, and people like yourselves who are on the call and who will see this. I really think that what we do, it's not so much a job, but it's more so just rewarding. It's very rewarding to help your loved ones and help your friends of friends, and to really change, I don't know, just say a culture in financial literacy or just education. And that's what kind of brought me along here at Merit.
Cool. Yeah. So you talked about really being a people person and focused in on that. And something that impresses me, and I want you to just talk about this, because especially for where you are in life and your age, I think it's unique, is your ability to focus in on the behavioral aspects and the relationship management side of it. And one mistake I made when I was a young advisor is I thought it was very logical and very numbers oriented. And then I realized, like I was saying about at the beginning here about the COVID bottom, it's very easy to sit in the classroom and go, wow, the market's falling apart. Should you buy stocks at a low price or go to cash? Yes, of course you're going to buy stocks. That's the rational thing to do. It can be very hard to emotionally get someone to do that. I've even had situations where, somebody literally had to just defer it to their spouse because they just couldn't look at it anymore type stuff. And that is a behavioralness. Tell me where that background came and how you learned kind of that side of things.
That's, you hit around the point there. It's, and for those of you I'm very young, I'm the younger version of David. So take maybe 15 years off of David and that's where I'm at. But essentially I played basketball in my life, and, basketball can be simple as just putting the ball through the hoop, but you have a team, it's not just about yourself. And so you have to learn to work with others who come from different backgrounds, who have different talents and skills. And ultimately you're trying to win. But I think where my experience came to really, interact with others was being open to change, being open to meeting new people, and just coming from definitely an island to the United States, speaking two languages, I could connect with a lot more people. So I think not only did basketball teach me how to, work with others, but also how to coach them, because you talked about hard decisions, and I'm sure everyone was on the phone with their loved ones during COVID or a pandemic, or a tragedy. We all reach out for help. We can't do it alone. And so I think empathizing is super important. I think understanding where their perspective is, understanding what they're going through, what they may be thinking. We may be talented and skillful in one area, but they may be completely opposite. And I think realizing that and working with them and coaching them up and just having that relationship, that honest, open, transparent relationship, I think that's what creates the best type of relationship, honestly, is, you recognize what you're good at and what you're not. And, they come to you, David, if they have questions about investments, but you also get to learn about, what is their why? Why are they struggling with this, or why are they succeeding in it? And I think asking that why question, you really get to the root of the issue or the concern that the client or your friend or your family members may have. So I think having that ability to work with others from all different backgrounds, I think that's just so important, especially now. And I can definitely directly translate that experience into my role today and role in the future.
Cool. All right. So you said learn what you're good at and what you're not. I think that's one of the hardest things in this business. You realize, or early on, a mistake you can make is think you need to know everything. And then later on, you start to realize no one knows everything. What you need to know is people that know the things that you don't. And then, go reference those people when those needs come up. So what would you consider are what are the things you're good at? And what are your, what in this business do you kind of gravitate towards the most and consider your strengths?
Great question. So and I've told you this personally, David, but I tell everyone, I try to be like a sponge. I try to soak up as much information as possible from all the mentors and coaches I've had in my life, because I'm not going to sit across from anyone and say, I know everything. It'd be fun to, but it's not true. And so, whether I'm working with David or, whether I'm working with other advisors here at Merit, I'm not going to know every single question, but I may know different things. And so you ask yourself what you're good at and what you're not. I know that I'm very passionate about, talk about going back to my UGA days, focusing on retirement planning. I thought that was just so interesting and so huge because none of my family had ever really, quote unquote, had retirement planning or had a professional help them. And I see the impacts they have today. And I'm sitting here as a young grandkid or a nephew or a cousin now, and I'm coaching them up when they're 3 times my age because they just didn't have that type of mentality. They weren't introduced to the education. So retirement planning, which really got my attention, and then that went into wealth management. And, you touched on some parts like advanced planning and investment consulting. And then you also go into estate planning, wealth protection. How can we pass that on to loved ones in my family and everyone else's families? How are we going to do that? So those are things that I'm really focused on, but, I got to be better at, so I got to work with more CPAs because I'm not as tax knowledgeable as I should be, or I could be. I think there's always something that you can always be better at. And it's kind of like my prerogative is I know I'm great at some things. I know I'm not as good as I should be in some areas, but that's where you work with people with experience. I think that's how I learned as a basketball player. I was 14 years old, 15 years old, playing against 25-year-olds and 30-year-olds. That's how I got better. And maybe I lost a lot of games, but when I came to play against, my age, I was in a different category than they were. And so I think having that just mindset, knowing I don't know everything, but if you ask me a question, and I may not know the answer right now, but I will know the answer, and I'll get back to you. So I think being a resource, truthfully, to everyone, including our clients here, just anyone I come across, that's my goal, and to soak up as much information as possible.
Cool. All right. In your own words, tell us your investment philosophy.
My own words. So even though my industry experience is not as lengthy and as tenured as David or some of the other advisors here at Merit, I truly believe that, the get rich quick fast, that type of strategy, or, you see the GameStop or the GameStop stocks and the Twitter and the Reddits of the world. I've always said, if you want to take advice from a social media platform, be my guest. But I think long-term investment strategies are the best way to go. And we don't let elections, pandemics, which we've experienced both in the previous year, we don't let those type of events affect, how we're going to invest. And what I mean how is, you have growth versus value. You touched on it earlier in the presentation, but what I mean is staying disciplined, living below your means, know what you can spend. And if you stay disciplined and you budget and you have these plans and you work with us, I think that's where that true philosophy of, okay, I'm living below my means so that I can enjoy my further years to come, or with my grandkids or with my children. I think that long-term investment plan is staying true to it. And you're going back to that, why are we doing the way with things we're doing? I think that really is kind of my quote unquote philosophy. I think staying true to your plan and staying true to your goals is absolutely important. If you don't have, many of you may have dreams of retiring, millionaire. A dream is only a dream. But if you have goals behind that dream, then you're going somewhere.
Gotcha. All right. Well, anything I haven't asked you or that you'd like to share with the group before we wrap up here?
I think my last comment would be is that whether, we work together weekly or monthly, or we only talk once, I'm very excited to meet everyone. And I hope that we are able to create a relationship and just build. And I'm a very laid back, easy person, but I am very passionate about what we do here. And why Merit was such a good fit is that they put the client first. And I'm sure all of you know that, but that was just super attractive to me to come here and find that this firm is really focused on, how we're going to help the client and putting them as number one. I think that's the number one thing that we want you guys to feel. And if there's anything I can do or be a resource, I'm here. And also, if you want some great spots to go visit Puerto Rico, I'll be happy to send you a call or an email and give you some great beach spots. Because I know we're all dying to get out of the house and get vaccinated. So if I can do anything for anyone, please let me know. My contact information will, I'm sure, be shared with all you all. But yeah, I appreciate Dave for having me on, and I look forward to working with everyone.
You know, actually, I think that's probably why we have less people on this webinar than normal. It is because everybody's like out running around the world now instead of just sitting at their house. Yeah.
Yeah, and I don't blame them.
Yeah. So what I will say on that, though, and this is an interesting observation, you know, I started off saying the market's not going to go up forever. The market goes down, we have like 100 people on these. And everything's great, you have like 10 people. I swear I could tell you what the S&P 500 did over the last 30 days just by looking at how many people and who attend these webinars. So,
yeah.
All right. We got a few minutes, so I'm going to practice something for you guys real quick. Sorry, I heard a feedback there. I'm going to try a whiteboard here. All right, and I saw this early on, and I want to remind us all of this little drawing here of, you know, this is really what's happened over the past year here. And let's just say this was normal back in March of 2020, you know, or this is the beginning of 2020 over here. So things are going up, and this is just kind of the stock market, and then boom, you know, COVID hits. And then you start climbing up, and out. And this zone right here, this is really the opportunity zone. And since I'm doing this with my mouse, y'all are just we're gonna stop right there. And what I'm thinking we're at right now is look at this opportunity. And when I say opportunity zone, this is where you had the opportunity to quickly rebalance from what had happened here, get yourself in place, and then be going up when the market's recovered. I am betting we are somewhere into this range where not only did it recover from the opportunity zone, we're now a little bit above this. And the question is, how far can this continue because of the ingenuity and such of you know, new businesses, and then also you know, valuations and things of that nature. But what I want to get at is, and this is what y'all need to go away from here thinking about, this part right here. Let's see if I could do this. Draw a line. Look how straight this line really was. Okay, ooh, cool. And look how straight this line really was. Okay, cool. So both those lines, even though you have this thing that I drew, are a little abnormal. What's really normal, let's see if I can get to this. It's more of a this. So you run out of space. But you get what I'm saying, right, guys? We're still climbing, but we have these ups and downs. And so that's my attempt at whiteboarding, and I hope y'all enjoyed my efforts there. Please, you know that the reason I did that is to remind you guys that a little volatility is not weird. It's part of the process. And if we're getting ready for that and we see it, we know we've already put the plan in place and we have the income coming out of our conservative assets. So with that saying, I hope we don't hit the volatility. This is a lot of fun. I love coming into work every day and having markets going up, but you know, not all things continue forever. And if we go back, then we're already ready and prepared. So with that, I will open up to any questions we have. And if there are no questions, I'll say a quick little closing, but I'll pause for about 30 seconds here. All right, Juliana, did anything come in chat?
No, not as of right now. What was that quote
Okay.
again? If you have, that means that you did an excellent job explaining everything at a seminar.
That's what Amber said. Yes, I've clarified the whole world. Yeah. All right. Well, with that, have a blessed rest of y'all's day, and we are here working to keep you from living a life, or to keep you living a life without financial regrets. And I will look forward to seeing you guys next month. And I think next month, Juliana, we're moving this like by 1 day or so. But anyway, we'll send that out in the email. So, all right, guys, everybody have a good one.
Thank you. Bye.
Bye.